Imaru, thank you so much for being with us today. What is gold reacting to today, especially when we're talking about rate hike or hold expectations?
Hi, it's, a little bit up this about $10 today. So it is, as it usually does, reacting to geopolitical risk, increased persistent geopolitical risk about the globe, around the globe. Clearly, the news this morning out of the embassy in Syria saw gold climbing to almost 22.70 this morning. It's stayed off since then, and it has been geopolitical risk supporting gold lately, but not just geopolitical risk, but obviously expectations of a Fed cut. Like they mentioned, not if, but when. And of course, strong support from the central banks around the world, which have been purchases of gold, providing what I think is actually a historical shift in the gold markets, potentially the emergence of central banks becoming an important driver of gold prices going forward. So that has supported gold here. We think will continue to support gold. And there are other drivers that have been absent in this last rally that we think could propel gold much higher from here.
Talk about the inflation side of this equation. We had PCE numbers at the end of last week showing that inflation, some improvements, but still remaining above that Fed target. How is that playing into the price right now?
I think I see it as sort of a win-win situation for gold. Of course, everybody's watching what the inflation numbers are saying and how that relates to what the Fed's going to do. But ultimately, inflation, sticky, persistent inflation above the Fed target, I think is very gold positive, regardless if the Fed cuts or not. Inflationary periods of higher inflation, are historically very positive for gold. So like I said, I think it's win-win when it comes to inflation from here for gold.
Now, gold equities, they've lagged physical gold, but we've seen that gap really narrow in the month of March. Do you expect that to continue going forward?
Yes, we have, you mentioned there has been, over the last couple of years, the gold equities have lagged gold significantly. We have been waiting for the reversal of that trend, and it looks like we finally got it in March. Stocks up 20% when gold was up about half of that. So that leverage, that reason why you own gold equities coming back and the equities catching up with gold. The gold equities really are historical low valuations at a time when gold is, making new all-time highs every week since the first day of March. So we see a lot of opportunities here for the gold equities to continue that re-rating and that catch up to to gold, which is why we strongly recommend that investors look at gold equities when they consider exposure to gold as an asset class, not just the bullion.